One-pager accelerates the ecosystem collaboration process. You use the one-pager for your target prices and ranking forecasts. Then play what if with the buy side at the speed of thought. With complete QL and QT thought process seen at a glance, you save you and your clients time. The one-pagers sync both sides of the mental and think sheet models on both Excel and Bloomberg platforms. You and your clients have access to our library of 200 one-pagers with the ability to customize new ones quickly. The one-pager will differentiate Cowen and give you a competitive advantage with your clients. Our one-pager solution enables you to quantify what Mervyn King and Robert Schiller consider the solution for uncertainty, i.e., forward-looking stories as a logical whole, constantly updated for new information. This is a 7-step butterfly effect methodology to forecast the target price for individual stocks using multiple scenarios. You add multimedia to your models. For example, you can use this map of China's 4 trillion Belt and Road Infrastructure project to track the impact of US-China competition on the 5.3 million people in Europe and Asia, 70% of the world's population. The competition includes 5G, AI, electric vehicles, healthcare, energy, logistics, military, space, and alliances. We are living in a qualitative world, and we specialize in it. We will now start the one-pager simulation. Part 1 frames the issues with a live demo using over-synced mental and think sheet models. Our users will tell you their mental and think sheet models sync over time, making both of them more efficient.
I'm from the sell side. So this is the Apple Excel target price model we sent our buy side clients. Across the top, you can see current price, earnings per share, $17.20, PE of 28, with yields a target price of 41.86 with a 5% return. We list the risks. We articulate and list the risks down the left side, and then we go through and calculate impact probability and an earnings per share impact on each of those risks, aggregate the earnings per share impact down the column, and we chart the impact of each risk on the risk-adjusted earnings per share. Our clients really like this simple chart because it focuses a dialogue on the big picture of the earnings per share forecast based on each of the respective risks. Everyone can see the impact of each risk in dollars on the overall earnings per share risk, which is an adjustment in the aggregate of $2.21. And you can see in the little box on the right how the risk-adjusted earnings per share moves from a benchmark 15 to risk-adjusted of 17.21. The chart updates the earnings per share dynamically as we play what if with the risks. We use 3 driver categories for Apple and for the portfolio: COVID, US-China competition, and Robert Schiller's animal spirits. The what ifs will focus on a COVID second wave and Tony Sacconaghi's collateral damage from the WeChat ban and its impact on Apple's $44 billion revenues in China and $60 billion revenues in Europe.
Our buy-side team uses our Excel app for research and Bloomberg app for decision-making. Our current target price is $449 with negative 2% return. Our EPS is above consensus and multiple below consensus. Apple is first, Tesla second, and IBM last in our last portfolio ranking. The portfolio drivers are the U.S. safe reopening versus second wave of COVID, reach out retaliation for China competition, and corporate and consumer spending moods for U.S. animal spirits. John Barry, the author of The Great Influenza of 1918, the deadliest pandemic in history, wrote an essay in the New York Times last week describing the risk of a second wave of the virus. He noted that the overall cases and daily cases in the US are 5 times those in China, 5 times those in Europe on a per capita basis. Also, that German restaurants have experienced a 9% increase from before the pandemic, and the US a 50% decrease. All surveys conclude that the Chinese will ditch their iPhones if WeChat is removed. Apple only has 7% share, and the China alternatives are high quality, less expensive, and include WeChat. The Tesla drivers also focus on the COVID second wave and the China retaliation, plus what Tony Saganacci calls its mind-boggling valuation. Also, rotation from growth to value and tech to autos valuation. Unlike smartphones, the Chinese EV companies are far behind Tesla. However, the government is providing huge subsidies to help them narrow the gap with a target price share of 80% in 2025. Our risk metrics are dynamic. We can change the mix from animal spirits, China competition, and COVID at the click of a button to substitute other risks such as political, macro, competition, market demand, and cyber risk, plus create new ones.
Hey, Josh, I'm going to do my usual role as, or what I do right now is a buy-side analyst. And so I'm going to kind of walk through some of the things that I'd be concerned about by looking at the one-pager and analyzing the Apple target price. So, Bill Stahl, if you could give me the current price over our forecast and the consensus.
The current price is $505.94. The consensus EPS is $15.08. The multiple 28.63 for a target price of $431.75. We're at $449 with a next year EPS of 16.91 and a PE multiple of 26.58.
Okay. I want to see what happens to the EPS if we have negative catalysts and then adjust the multiple. First, let's say that Trump does ban WeChat and forces Apple to remove it from all of their phones in China. So let's rescale the China weight to 35% and change the impact to existential and the probability to virtually assured. Tell me what happens to price.
Goes to 410.66.
Wow. Okay, let's also take a look at the COVID situation. John Barry's comparison of US and Europe is the most apples to apples comparison I've seen. It compares the democratic developed countries side by side. The 5-to-1 ratio in per capita cases indicate US is at a far greater risk than Europe of a second wave or a continued first wave. So let's leave the COVID weight but change the risk to catastrophic and highly probable. What happens to the price then?
393, which is a return of loss of 22.1%.
It's pretty significant. So what's the multiple in our worst case scenario?
20.
Okay, let's use it. What do we get?
$301, down 40%.
Wow. Seems like the market is kind of underpricing the risk here. So let's test it with the portfolio app. Let's make the Apple ranking consistent with our target price forecast. Where does it go?
Okay, so Apple is number one. It's 7th in quant rank and 1st in the qualitative rank. Got a 2% decline in revenues, but there's very strong demand for the iPhone 11 and 12. And we believe in this version that the TikTok WeChat ban is not that big a risk. It's not going to apply to China. It's got none of the risk, and it's got the benefit of the 5G triple plus, the X factor of 5G super cycle. The C-brand spectrum auction is going to occur as scheduled. The benefit of the Huawei ban in Europe and Fortnite is not a big deal.
Okay, can you go to the edit screen and summarize everything for me?
Okay, so right now it's number one with a valuation rank of negative of 37%, 33 PE, 60.63 dividend yield, 3.21 cash flow, a PEG next year of 2, and here's the problem, the negative 2% decline in revenue growth.
What if we change the catalyst to have WeChat ban to include China? And change it to a relatively negative, i.e. triple minus, or actually really negative triple minus scenario.
That moved it from first to seventh.
Wow. What if we changed Apple's risk to having all of the risks?
Still 9, needless to say, but getting more spread as far as being 9.
Gotcha. So what if we change the X factors to include a 5G supercycle that doesn't start until Q4 2021?
I'll move it to triple minus. Save and exit.
Yes.
It's number 9.
So it's a pretty dramatic change in the ranking. What if you, can you show me some of the detail in the numbers?
Okay, so here's an example. So you can see right here why Apple's at such risk, because it's only got 7% market share in China. And so if you take away WeChat, the alternatives are some of the comparable maybe with Samsung, but the other 4 Chinese smartphone companies, Huawei, Oppo, Vivo, and Xiaomi, make world-class phones at low prices, and they include WeChat. And then over here, you can see the exposure. You can see on the right of the net sales that Greater China is 43 billion, 17% market share, and then Europe is 60 billion. So you got a real problem with China, but you've also got a significant problem with Europe, because the real competition between China and the U.S. is going to be in Europe, and that's $60 billion of revenues. So together, you're talking about 100 billion of 260 billion in revenues.
That's 100 billion of Apple's revenues, correct?
Yeah.
Sounds like it's pretty significant to me.
Yeah, so I think maybe in the next, maybe in the next slide. Oh, EPS impact, yeah. So are you basically taking the weighting at 39%, say for the DMND 5G Supercycle 21, mid-band 4Q 21, and the weighting 39% to the EPS? No, that's not right.
Yeah. So let me.
How do you calculate
okay.
that EPS impact? I guess is just what.
All right. So you know that the game changer is going to be a 1, and the existential is a -1. Okay, and virtually assured is a 1. So if it's the game changer, which is the highest, it's going to be a 1 times 1, which is 100, times the weight of 39, which is the weighted score of 39.
Right. Okay.
Okay, and you can see here that these are lower, but you see the maps in the scoring framework, in the live model in Excel. I mean, Eric knows how all it works. Okay, so then what you do is you set the range. So the range is like the current might be 15.2. You set the range. So let's say 18 to 12.
Mm-hmm.
And then the benchmark is going to be 3 up or 3 down. So then it takes the score of 74, multiplies it by 3 to get 2.2, and then it goes over here, and then it's added to the benchmark. So you set the range, just like in the football field.
Right. But I guess just for that one, they have the EPS impact of $1.17 on that last line attached to the first row. Is that a $1.17 impact for that risk, for the risk specific? And so how do you get? I'm just thinking like working through a model, how I could predict it, $1.17 in the EPS impact off. I mean, is it based on the weighted score?
Okay. So if we were doing this live, I'd go right to the calculation, because all you do is you press a button and up comes the scores. So the impact scores will come up from 100 down to, 37 or so, and then the probability will scale from 1 to whatever. So you see it right here, and then it multiplies these scores times the weight to get the weighted score, and then the weighted score is multiplied by the benchmark range to get to 2.2.
I'm just trying to figure out how, so if I was doing this for a company that I covered and I had a risk factor, although it's...
Well, let's do Edwards.
Josh, and let me jump in. This is Bill Shilen again. If I think that perhaps a clear example is on COVID. And in this model, we're basically saying COVID gets fixed by Q1 21. If I on the buy side say, I'm not so sure about that, I think it's going to take a little bit longer to have a complete COVID fix. What happens if, and this is the what if scenario, what happens if I don't want to be that aggressive. I want to be a little bit more conservative. So let's put it at Q4 21. Mm-hmm. So then you change the weight, you change the impact, you change the probability, and you see how much of an impact that has on your EPS model.
Gotcha. But I'm just saying, I think it might be more just visually digestible if it was impact to the multiple. Because I think just as an analyst thinking about one of my models, and if the COVID fix is in place for Q1, that would imply certain amount of revenue upside, have to factor in. So I'm just.
Hey Josh, that's very funny, very funny, very funny, and I'll tell you why. You have no idea why it's funny. Bill, would you tell him?
I know why it's funny.
Would you tell him briefly why?
Because we've made a presentation to other sell side guys, and come at them and use this presentation is based on EPS impact. We made a presentation to another sell side group on that just basically adjusts the multiple. And he at the end of the presentation, he said, "Well, I don't really use multiple. I use EPS impact when I go and talk to my clients." So, and that's fine. We're not trying to dictate how you guys, talk to your clients. But the beauty of ThinkSheet is you can adjust it, or you can have it come up with an answer on either EPS impact or multiple impact. So if you want to focus on the multiple, that's perfectly all right. We can.
You saw in the Bloomberg app where you just pressed a button and toggle between the multiple and the EPS.
Yes.
We can do the same thing. So you can put in multiple if you want, no problem. And
I was just thinking, my own thought process was, how can I understand the weighted score for the risk and impact, the game changer classification of impact, virtue assured probability, but just thinking, when I look at that and I think about my model, I'm just like, well, how can you translate the weighted score to an EPS impact? Because there's just so many inputs from top line all the way through. But anyway, I get it. you could use a multiple in that category, multiple impact, or EPS is going to do the same thing. Either numbers are coming down or up, or the multiples coming down or up, and it's going to have the same kind of impact in terms of the valuation analysis. But I was just
Remember,
and maybe a multiple impact is more appropriate because essentially these are big picture judgments here and big picture effects on your model. And I see where you're getting hung up is like the EPS impact. It's a very precise thing, but maybe you want to look at a story and whether it's an Apple, whether it's a Tesla, whether it's an Edwards, whatever, and say, look, if these things happen, it's going to get either assigned a higher multiple or a lower multiple based on these judgments.
And most of our users have done it with the multiple or the discount rate. That we sort of changed it because of the other person's reaction. But remember, if you go back to
because I understand what that analyst is saying. Because I mean, basically, when we have discussion with the buy side as well, we'll say, well, there's to get to the EPS impact, you've got to have a lot of they'll cause this level of revenue hit, and with the mix shift, the gross margin pressure, they won't be able to reduce their fixed costs or the variable costs fast enough, and then we ultimately say, and the EPS impact is this. So I was just curious in terms of the weighting, how you could pull some of those assumptions out of the model just with the weighting. But I understand where it's all linked. It's all.
Josh, remember this. Remember slide 3, and that could be a great idea for a conclusion. We have 200 one-pagers. We have them for banks, for REITs. We have them for real estate development. We have them for all prices. Our strength, most of them are equities. But the point is that if you can quantify your judgments in whatever language you want to tell the story and put it all on one page, it means that ThinkSheet is almost infinitely versatile. It's basically about as versatile and dynamic as your thought processes.
Right.
So all you have to do, if we were to do a pilot, would be to sort of start with something like this, and then you say, well, here's the way I really talk with my clients or with my team, and you just tell us what you do, and we embed that into the model.
Yep. No, I got that.
And really, and the beauty of it, at least from my perspective, as a buy-side guy, is I can sit here and have a conversation with you, Josh, or any other sell-side guy, and yeah, it's not going to be incredibly precise and in terms of adjusting EPS numbers necessarily, but it'll give you a really instantaneous big picture. An idea of what the instantaneous big picture impact of a change in one of these judgments is going to be.
Right. Exactly. Got it. Right. So it's kind of a range of impact. It's not a precise EPS hit. I totally get it. I was just that was the only thing that stuck out where I was a little bit about how you got there. But that all makes sense.
Well, in the age of uncertainty, precision is almost impossible. But if you can get the direction of the directional changes.
Yes, that's what I was looking for. Directional. Yep. Go ahead.
Sorry. Yep. We can do that.
Billy, let me take a second. I mean, we use these written research reports, 20 pages, 30 pages. This is much easier to read, look at, and absorb than going through a piece of research presented that way.
And that's, I think, when you get to the value proposition of ThinkSheet, whatever time it takes to embed your analysis into a ThinkSheet model, I think will be more than made up for with this presentation and ability to adapt it and change it and modify it with your clients.
And collaborate.
Right, collaborate as well.
Yeah, so that's what we're trying to do, or Bill is trying to do, I should say, with this one slide here, is to show how collaborative it is and interactive it is, and again, and how quickly that collaboration can occur.
What do you think of, Bill, this? I mean, I totally understand the value proposition for sell-side analysts communicating with the buy side and their counterparts, portfolio managers down through analysts. What about, I mean, are you guys marketing this to the buy side for their internal kind of pitches from analysts to portfolio managers, where you set up this framework? Because I was just thinking it could be pretty, I mean, that could be desirable as well on the buy side, just to.
Oh, absolutely. I mean,
You guys are doing
it's almost like the main target is the buy side,
Gotcha.
because first they have Bloomberg's, number one, and number two, if they like it, they kind of almost require you to do it.
Josh, if you ended up using this, you could introduce it to your buy-side clients. It gives you an edge and shows you, it differentiates you from the other research firms out there.
Well, I think this is one of those, we get back to the value proposition, Josh, and which is there's a little bit of extra time incorporating ThinkSheet, but I think it makes up, it's worth it, because the ability to describe and visualize and summarize the thought process, both on the quantitative side and the qualitative side, is, I think it's unmatched. I mean, we were talking earlier about, reading 30-page research reports, which I do all the time, and I kind of, when I first met Bill, I said, what I think the buy side might want to do at some point is, or come around to, is make ThinkSheet a verb, so that everybody says, you got to ThinkSheet it for me, because it does summarize things, and it does combine, your quantitative analysis plus your qualitative thinking into one easy visualized product, and that's what I think the value proposition is here.
At the end of the day, a picture's worth 1,000 words.
That's right. Yeah, no, I mean, there's a lot of efficiencies baked in, if you can, as an equity research team at least, migrate to ThinkSheet, which is, and time saving is a big deal. And, it structures your thought process, it keeps you, regimented in how you're thinking about these companies, the risks, the what ifs, the drivers. And, if you have this in front of you, it facilitates how the structure of your conversation with the buy side in your pitch. And then if they're on board, you can collaborate on some of the drivers and adjust some of the risk assessments and those what ifs. It can lead to a more fruitful and productive conversation. I think
Right.
just one thought off the top of my head going through this, and the reason I brought up the buy side, I think we have a lot of conversations where we're digging deep into single names, but I think from the sell side, at least my discussions, a lot of the time, I get a little bit confused sometimes why buy-siders are calling, because their questions are more just on specific issues or just general background information. And anyway, but yeah, when I'm making a pitch, make one of our calls, and we're speaking with a lot of investors, say on Edwards, and you having something that structures your pitch and your thought process as you're working it up and keeps you kind of in a standardized approach. I think there's a lot of value in all that.